Welcome to Vector News 24. I'm John, and this is your weekly recap for the NYSE and the broader U.S. financial markets on Friday, April 17, 2026, as we close out the week and wrap up the big picture. U.S. equity markets finished the week in a strong uptrend, with the S&P 500 and Nasdaq Composite both closing at record highs, extending their 5-day winning streak. The Dow Jones Industrial Average also ended the week slightly higher, as tech and growth-style leadership carried the broader market higher, despite some underperformance in cyclical and value-style sectors. The key takeaway is that the week was defined by a risk-on rotation, with investors rotating into technology and other growth-oriented names, while remaining cautious on some industrials and financials. From an economic data perspective, the week's Producer Price Index release and related reports reinforced the narrative that input price pressures are elevated but manageable. Markets are increasingly pricing in a soft landing scenario, where inflation gradually eases without triggering a major recession. The Federal Reserve remains in focus, with several officials delivering speeches that emphasized a data-dependent stance. Long-term Treasury yields have stayed relatively contained, reflecting the belief that the Fed can keep rates in a range that supports growth without reigniting inflation. The VIX and related volatility measures are showing low levels, indicating that investors are comfortable with the current risk-reward environment. On the financial news front, earnings season continued to dominate sector-level moves. Major banks and several large-cap names reported results that are shaping sentiment around net interest margins, loan growth expectations, and credit quality. The tone was cautiously optimistic, with many firms highlighting resilience in domestic demand, even amid higher-cost conditions. This is helping keep the financial sector sell-off in check and supporting the broader equity rally. The tariff and trade policy environment remains a wild card, with ongoing tensions in the Middle East and potential new tariffs on key sectors like semiconductors and industrials. The week ended with a strong close, reflecting the market's confidence in the current macro backdrop and the earnings season narrative. For investors, the key message is that this is a pullback within a larger uptrend, with the S&P 500 and Nasdaq consolidating gains after a recent surge. The week's action is consistent with a soft landing scenario, where the Fed keeps rates in a range that supports growth without triggering a major inflation spike. For traders, the focus should be on the next batch of economic data, including housing and labor market reports, which will give a clearer picture of whether the soft landing scenario holds. Any surprise in these reports could nudge the narrative and, in turn, affect bond yields and equity valuations. Now let's move to crypto, gold and silver, and the mining sector story. On the crypto front, the week ended with Bitcoin trading near the upper end of its recent range, hovering around $75,400, up 0.73% from the start of the week. The market is clearly testing support around the mid-$74,000 to $76,000 range, with a strong bid stack visible in that zone on-chain. If Bitcoin can hold above that support, the technical setup favors a move back towards $76,000 or higher. A break below $72,800 could trigger a short-term drop towards $70,500, but that would likely be seen as a buying opportunity rather than a full-fledged bear market. The Fear and Greed Index is stabilizing after a brief dip into the extreme fear zone, reflecting the market's resilience despite the complex macro backdrop. Ethereum is trading in the mid-$2,340 range, up 0.40% from the start of the week, with the broader altcoin and DeFi sectors under pressure, reflecting repositioning rather than capitulation. Spot Bitcoin and Ethereum ETFs continue to see inflows, with BlackRock's IBIT now holding over 791,000 BTC after recording $505.7 million in net inflows over the last 48 hours. This is supporting the structural bullish case, even as short-term sentiment swings between fear and greed. The crypto market is increasingly transitioning from a speculative environment to a fully fledged segment of global finance, with institutional decisions and regulatory developments playing a key role in shaping the narrative. Shifting to precious metals, gold and silver finished the week in a firm uptrend. Gold is trading near record high levels, with some forecasts pointing to further upside in the near term as inflation and geopolitical risks remain elevated. The US dollar-gold relationship and real rate expectations are key drivers, and the current setup suggests that gold could continue to outperform in a risk-on with hedge scenario. Silver is following a similar pattern, benefiting from both safe haven demand and renewed optimism about industrial demand, especially as the global manufacturing cycle stabilizes. The gold-to-silver ratio remains elevated, highlighting the relative strength in gold versus silver. For mining stocks, the story is positive but nuanced. Gold mining equities have benefited from the strong tone in the underlying metal, with several large-cap producers trading higher and outperforming the broader market. Silver mining names have seen even stronger gains, as silver's price surge gives them extra leverage. However, base metal miners and some industrial-style resource plays are under pressure, reflecting the softer tone in broader industrial sector sentiment. This is consistent with the broader macro backdrop, where growth is supported, but not at the same pace as earlier in the cycle. The key takeaway is that safe haven demand and risk asset positioning are both in play, but the balance is tilting more toward resilience than panic. That's consistent with the broader equity market tone we're seeing in the U.S. session. In Asia, the Nikkei 225 and other regional indexes finished the week in a cautiously positive range, reflecting the constructive tone that flowed over from the U.S. session. Japanese exporters, including automakers and electronics firms, are leading the gains, supported by a relatively stable yen-dollar relationship and a backdrop of cautious monetary policy from the Bank of Japan. The Bank of Japan's message remains that it will keep yields low and support domestic growth, which is helping to cap any sharp moves in the yen and providing a broadly supportive backdrop for Japanese equities. Beyond Japan, mainland China's indexes are trading in a mixed to slightly positive range, as investors balance the impact of higher oil prices with expectations for continued policy support from Beijing. Hong Kong-listed shares, especially in financials and real estate, are trading with a modest gain, reflecting the supportive tone in global risk sentiment, even as higher funding costs remain a concern. The broader Asian session has been constructive, which is a positive signal for the later part of the U.S. trading day, because strong moves in Asia often feed into European and U.S. sessions by influencing futures and options flows. In Europe, the DAX, FTSE 100, and other major indexes finished the week in a mixed range, with some sectors lagging the U.S. rally. The European Central Bank is in focus, as markets await the next monetary policy decision and guidance. Recent data from the Eurozone have shown signs of a slowdown, with manufacturing activity still under pressure, but the services sector remains relatively resilient. The ECB's tone will be key to the next leg of the European move, with any hint of a dovish tilt likely to support equities, while a more hawkish stance could weigh on risk asset positioning. The political backdrop in Europe, including the aftermath of the recent elections and policy debates, is also influencing the market's risk appetite, with investors watching for signs of stability and growth-friendly measures. The bigger story this week is the energy shock in the Middle East, where oil and gas production problems have pushed crude oil futures to record highs. Real prices in Singapore have soared to around $200 per barrel, driven by the crisis and geopolitical tensions. This is feeding through to both futures and real-time prices, with the complex interplay between futures and physical markets affecting the outlook for inflation and economic growth. The situation is a key driver for the market's risk-on but cautious tone, with investors watching for any signs of resolution or further escalation. The key takeaway is that today's move is being supported by a global backdrop rather than just a US-only rally. If the Nikkei and other Asian indexes hold their gains into the overnight session, it increases the odds that US markets can defend their levels or even extend today's rally into the afternoon and tomorrow's open. Conversely, any sharp late-session reversal in Asia could spark more caution in New York. That's your weekly update from Vector News 24 on Friday, April 17th, as the NYSE closes for the session. Markets are cautiously constructive, supported by a rebound in tech, a mixed but manageable economic data picture, and a relatively stable backdrop in Asia and Europe. Crypto is consolidating after a recent surge, and gold and silver are holding their defensive roles as safe haven assets. The energy crisis in the Middle East is a key driver for the week's action, with real-time and futures prices reflecting the complex macro backdrop. If you found this breakdown helpful, make sure to like this video, subscribe to Vector News 24, and hit the bell so you don't miss our daily updates. We're here to bring you clear, no-hype coverage of the stock market, economic data, financial news, crypto, and the precious metals and mining sector markets every day. Thank you for watching. Until next time, I'm John, signing off.